There was an expectation, really, that answers would come from the United States first, the EU second, and perhaps North Asia third. I think that in the coming 5 years, that's going to be turned very much on its head. And listening skills will become very important because the questions will be coming from North America, the European Union, and North Asia. And the answers are coming from some very surprising places.
Welcome to Smarter Markets, a weekly podcast featuring the icons and entrepreneurs of technology, commodities, and finance, ranting on the inadequacies of our systems and riffing on ideas for how to solve them. Together, we examine the questions: are we facing a crisis of information or a crisis of trust? And will building smarter markets be the antidote? This episode is presented by Base Carbon, sensible carbon investing. For more information, visit basecarbon.com.
Welcome back to Catching Up on Climate on Smarter Markets. I'm Dave Greely, Chief Economist at Abex Technologies. Our guests today are Dave Ernsberger and Mark Eramo, co-presidents of S&P Global Commodity Insights and members of S&P Global's executive leadership team. We'll be catching up on the state of U.S. policy and the global discussion on energy, climate, and sustainability after New York City Climate Week and talking about where we're going next. Hello, Dave and Mark. Welcome to Smarter Markets.
Great to be here.
Greetings.
Well, it's great to have both of you here. At S&P Global Commodity Insights, you both lead a global team that delivers comprehensive market data and essential market intelligence and insights that make us all a little smarter. And I've been looking forward to being able to catch up with the two of you. Last week, of course, was New York Climate Week. And Dave, I thought we could start off with your take on the state of the conversation coming out of New York Climate Week.
Thank you very much. And it's such a pleasure to be here and to share some thoughts and discussion with you and the listeners as well. This is a great time as we're recording to reflect on what Climate Week showed us all about the state of the discussion globally around investment and progress in building an economy where there's a role for decarbonization and there's a role for greater efficiency. And one of the maybe most important things about Climate Week that certainly struck the attendees that were there, including some of our own delegates, was that the event was actually well attended. There was a question going in as to whether Climate Week in the United States would be something of a quieter event, lower key event. But according to various estimates, there were at least 1,000 registered sort of official events. There were more than 100,000 people who attended. So there was plenty of interest in what was going on, plenty of events and plenty of conversation. The key messages coming out of Climate Week won't really surprise anybody in 2025, but it's worth pausing and thinking about what they are. There are really three major themes. Firstly, that the investment scape, the landscape around driving the conversation around climate is turning towards capital discipline and return on investment, and maybe a little bit away from government support and policy. Number two, opportunities to improve efficiency and therefore saving dollars and saving emissions are really the centerpiece of all of that. And you'll hear a lot of people talk about this, but the energy industry in particular is not new to the concept of sustainability and sustainable development. Sustainable development and particularly efficiency has been at the heart of what energy has been doing for several hundred years now. And then the third one is a little more prosaic, but worth calling out: an explosion of conversations, a proliferation of initiatives around setting some standards for carbon accounting. Now, that doesn't get everybody excited, but it gets us excited.
That's fantastic. And I know the streets of New York were definitely packed, and I sensed the same thing. I felt like there was much more of a practical, business-like attitude towards climate and carbon that I detected in some prior years. I'm curious if that's also the sense you got. It was a little bit more mainstream. How do we approach this from a business perspective?
I think that's right. And if anything, some of maybe the bubble effect of what we felt with the IRA and government-backed investment in the United States, which got everybody very frothy and excited, by the way, has been a little bit replaced by that kind of common sense conversation, maybe slightly more grounded conversation, maybe even less exciting conversation, but perhaps more actionable in the end, around how do you invest in energy expansion in particular, new energy, new requirements in a way that is actually aligned with more efficiency and ultimately a greater financial return. So I think to your point, David, what was interesting was there was an opportunity for folks to turn their backs on this conversation, but clearly there's still profit to be made.
And of course, one of the reasons why people weren't so sure if Climate Week would be well intended, of course, is the strong change in US policy under President Trump. President Trump addressed the UN General Assembly during Climate Week. And I was curious, how was his address to the UN General Assembly received? And how important is US climate policy to that overall global discussion today, Dave?
I think it's worth putting President Trump's commentary at the UN into context. And the context I would call out is that, firstly, investors and the market, and even folks who take a more of a social view on climate change, ultimately welcome policy clarity. And however you think about the tone and the nature and the delivery of President Trump's address to the UN, it certainly brought a lot of clarity around what the US administration's policy will be towards these kinds of questions. So the clarity is welcome. And there was a certain amount of showbiz to how it was delivered. And that's what people pay to see, I suppose. And the second thing I'll say in terms of context setting is there's a global conversation going on around investment in sustainable economics, energy that is decarbonized, again, in that expansion space that we were talking about earlier, which carries on not only, I would say, despite changes in US policy, but almost because of them. And that's worth talking about on this show as well, actually, how the rest of the world pivots around some of those delivery points. But I would say the US was very clear around the same sort of time that President Trump was addressing the UN. The Department of Energy also announced that it was suspending, I think, $13 billion of investment projects in certain parts of the United States. And so words and actions were fully aligned.
And Mark, I'd like to bring you into the conversation and dig a little bit more into some of the clarity that's been achieved around US policy. At S&P Global Commodities, you've written about President Trump's approach as putting an emphasis on energy dominance. And I wanted to ask you, what do you mean by energy dominance, and how does looking at his policies in that way help us understand them a little better?
Thanks, David. And to be clear, energy dominance is a term that's coming out of the U.S. administration. And I'll leave it to them to define how they put a definition to that phrase. What we saw clearly from the U.S. administration, especially back in spring, as they were just coming into the office at CERAWeek in Houston, where they had a platform to talk to people all over the world. The policy was around bringing all forms of energy that the market will support and tying in the more pragmatic approach to investments, not picking and choosing winners, but let the market and technology define which projects and which forms of energy will advance at the fastest pace. It was really, let's bring all forms of energy to the table, whether it be hydrocarbons, certainly renewables that make sense, where they make sense and how they make sense. Lots of conversation about nuclear, biomass. So it really was a discussion around portfolio. And I would say there is an emphasis coming out of the administration on natural gas, and to the extent that the U.S. can continue to be a major player from a natural gas perspective. And so that's how I would look at it, is rather than try to pick and choose winners and losers, let's let the market determine and move forward with projects that are approached pragmatically, provide a return to the shareholders, to the stakeholders, and then bring energy that can support the marketplace. I'll just put in an added dynamic to that. That was a conversation that took place in Houston in March of this year. I had mentioned to you, I'm sitting here in Cape Town at Africa Energy Week and listening to conversations between both U.S. government officials or U.S. represented companies and countries and policymakers in Africa who are having the same kinds of conversation about a pragmatic approach. But certainly, as you sit here in Africa and look at the opportunity that they have to drive projects in their hydrocarbon base, there's a lot of emphasis there from the angle of a profitable and successful hydrocarbon development can bring and can help to fund renewables at the same time. So there's this balance. And again, not picking and choosing, but a sense bringing forward a pragmatic approach to the investments and letting the capital flow to Dave Ernsberger's point, which was where there's clarity of policy, both from government and whether it be local or national, and where there's opportunity to get the financing and where you can see a return, that's where the capital is flowing right now. And lots of discussions about how you continue to open that up and a lot of support from US based companies here in Africa.
I think it's really interesting to think about the US in that global context, Mark. I think we come to look to see governments like what program, what policy are they going to use to support energy or climate policies in their own nations. If we see the Trump administration, it sounds like they're kind of stepping back from that if they're just going to let kind of the market win out. Is that true? Or are they? I'm just trying to get my head around what should we look for in terms of programs or policies? And what should we expect to happen to existing programs, such as the ones created under the Inflation Reduction Act?
Well, clearly, there is the impact on the Inflation Reduction Act. But as I go back and think about the messages that were being delivered by Secretary Wright and Secretary Burgum at CERAWeek, it was about how do you provide policies, for example, on the permitting process, the ability to bring the projects forward and not get tied up and take too long a period of time in order to get steel going in the ground. So I think those are the kind of things to look for to try to how can they support the process of energy development as opposed to have long extended periods to where markets are subject to volatility and therefore adding more risk to the projects themselves. So again, it just comes back to clarity around what can those who are looking to invest in this sector expect, and therefore how do they manage their risk associated with these fairly sizable and massive investments.
And how do you think people are feeling about these investments? How risky do you think they are being perceived right now? And is there a strong attitude in the private sector to move forward with a lot of these projects?
As I think about the projects that are advancing, discussions underway, the things that we're tracking, the normal amount of, or I say normal amount of risk associated with these markets and their volatility are there. It's all about providing clarity in terms of what you can expect going forward. LNG export terminals are now, if you will, back on the map. There's probably more across the US than will actually get done, but there was the moratorium and now we're back open for business in terms of the companies that want to come and compete for the capital in terms of LNG exports from a US perspective. Pipeline projects, trying to connect north to south or whatever it might be. Again, there's been a bit of a pause on that, but now those may actually open back up. And so again, it's just that clarity that allows the capital to flow.
And Dave, I'd like to turn back to what's happening outside the United States with you. And I'm curious, what developments are you following and what countries do you think are worth watching most closely?
There are two countries and one group of countries that I'm going to offer you here on the show today that are very, very much front of mind for me and that I would recommend listeners pay close attention to. I suppose the countries won't be a surprise, but I'll tell you why I call them out in a second. So, country wise, China is making unbelievable strides in building out a new energy economy. And if you think you're paying enough attention to it already, you're probably not. India is determined to build a green hydrogen economy so that it can flood the world with competitively priced hydrogen, which is in its very earliest days of development. But there is a lot of muscle coming together behind that between the public and private sectors that make it fascinating. And thirdly, I would call out the GCC nations in the Middle East. I'm joining you from the UAE today, so I'm sort of sitting in a front row seat watching this happen, where there's a very interesting conversation going on regarding how to put in place the infrastructure to support an AI data center boom, which the region would like to host, particularly perhaps Saudi Arabia and the United Arab Emirates, and how they do that without cutting off their exports of oil, which are really important for their economic development. So renewable power is actually a very common sense solution there. So we could dig a little deeper, perhaps, into some of the motivations behind those three areas of exponential development going on. But those are very, very dynamic areas where the pace of investing and expansion in this era of energy addition is only really getting faster.
And Dave, one of the themes that we've followed over the past year or more is that different countries' motivations for moving ahead on new sources of energy, renewable energy, is really driven by their local situation. So in the United States, because we have such a large endowment of oil and natural gas, often climate policies are seen as restrictive. Whereas in countries like India and China, it's a way to overcome deficiencies, get better energy security as they are more oil and gas poor. I was curious, when you're looking around the world and at China and India, how much do you see those types of concerns shaping the way they're investing in energy and the way they're investing in more sustainable energy forms?
David, those kinds of concerns are absolutely at the heart of why the three areas I pointed out, China, the Middle East, India, are all aggressively pursuing energy expansion strategies that have renewable energy at their heart in most cases and are a big part of their future. If we just take them in turn real briefly to sort of talk about why, China is the absolute classic paradigm of wanting to pursue an intensive self sufficiency. I often tell people that China and the US are not really so different, actually. That drive to be in energy independent, energy free is as close to the hearts of the Chinese population and policymakers as it is to anybody in the US. However, the pathway for China is profound electrification, the rapid deployment of an electric vehicle fleet into the auto force, the things that we've seen happening there. By the way, not necessarily a slam dunk for climate because a lot of that electricity is coal fired. And I'm sure you've talked about that on previous shows. But electrification, which is a pathway to cleaner energy in the end, is being driven by being paired up with another policy concern, in this case, self sufficiency. The Middle East and India also show how when you marry a strategic imperative alongside a drive towards sustainable economic development, it's got double the chance of being successful. If you look at India, actually, what they're trying to do in India is, yes, okay, be a little more energy independent, but actually spending time with the Indian government just in the last couple of weeks, the Indian energy minister, Hardeep Singh Puri. The conversation in India is actually about building an export economy. So India is pouring a significant amount of public, private rupees in this case into building out infrastructure for hydrogen of all colors, but with a special emphasis on green hydrogen, with an ambition, actually not so much of supplying local demand with hydrogen, but actually building an export machine that will flood the global markets with attractively priced green hydrogen. And that's actually a trade balance question. It's a role in the world question for India. And they've had great success there. When we were in India just a couple of weeks ago, we learned that the marginal price of green hydrogen had dropped from about 550 per kilogram to 450 a kilogram. So that's a significant sort of 15-ish% drop in just 2 years. And they're pushing for greater returns there too. The Middle East is probably the most fascinating of all. The Middle East is hydrocarbon wealthy. Saudi Arabia is literally the Saudi Arabia of the oil market. And yet the push there is to build solar and renewable power to underpin what they hope will be a huge competitive opportunity to diversify the domestic economies into AI and data centers and to not sacrifice oil and gas exports along the way. Energy and electricity demand in the Middle East will probably double over the next 30 years or so. Currently, 70% of the electricity here is produced using natural gas. That wouldn't work in the sort of climate they're talking about building into. So each of those areas has their own policy objective that sits alongside a sustainable economic development, and it's supercharging the outcome.
I feel like the AI and the data centers raise such an important point that we're not going to slow down our energy use. A few years ago, there was the conversation around, well, we're just going to have to use less energy. And certainly in the developed world, AI and data centers really seem to have pointed out that if there's an opportunity to use more, we'll use more. Is that even part of the conversation, using less energy these days? And then I also wanted to turn back to Mark, given you're in Africa right now, for countries that are in the process of developing more, how are they looking at being able to grow their own energy supplies at an affordable rate going forward?
I'd be happy to take the first part of that question, David, and throw it to Mark for closing out with a view on what's happening in Africa. The conversation in the existing energy infrastructure is all about extending a centuries long tradition of running operations more efficiently. There's a very fascinating discussion around creating digital twins of systems, running agentic algorithms around outcomes to do predictive maintenance work so your pipelines don't break down and to reduce emissions so you don't lose actually energy in your production chain. That's ultimately, believe it or not, all about reducing energy consumption because you can make great energy consumption savings by running those kinds of operations more efficiently and then exporting that know how to other industries. So, absolutely, using less energy is part of the discussion and an important part of the discussion, but maybe in a different way to how listeners might be thinking about it. It's less about running your air conditioning at 20 degrees Celsius and more about running your significant heavy industry better. But inevitably, pushes towards investing in better climate outcomes are much, much more successful when it's a yes and conversation. Yes, we need the energy we have today and we need more, as opposed to an either or conversation where we talk about shutting down some things and building up others in their place. In a world where, to your point, we just need more energy.
And I'd love to turn to you, Mark. What's the state of the conversation in Africa on this?
If I can just divert back to the previous conversation for a second, just a slightly different perspective from, again, because I've been involved in downstream industries for all of my career, refining chemicals. And from the very beginning of my career with a background in chemical engineering, what the engineers who design these facilities do is they make a living by making them more productive. And the best way to become more productive is improve the energy efficiency of these assets. And that has been a trend that's been underway and will continue to happen in these capital intensive industries. How can we be more efficient, use the same amount of energy to produce more, right? Or less energy to produce the same, however you want to run the calculation, but improved energy efficiency has been a hallmark of these industries, and I think will continue to be. And whether you're looking at automobile fuel efficiencies or the energy consumption of these different, like I said, capital intensive assets. The other thing I found interesting was, well, I agree with you that I've had plenty of conversations where climate policy is viewed as restrictive in a country like the United States that is endowed with plenty of energy. It's also, I believe this is the case at the same time, that it's because we have very secure and very affordable energy that we can branch out and start investing in doing research and development on alternative forms of energy in different ways to bring new forms of energy to the marketplace because we have a sound base of a hydrocarbon security and very affordable business that can fund the rest of that operation, if you will. And so I point to projects that I've seen where, using the chemical industry as an example, replacing natural gas with hydrogen and steam cracking is a pretty expensive endeavor. It can be an expensive endeavor, but we can afford to do that and look at those things. Or complete electrification of cracking furnaces. We can afford to look at that and see whether or not those could be successful because there's this base of low-cost energy. So wanted to return to that for just a second. Look, the conversation here in Africa is very, very clear to me in terms of what I've heard so far. And while there are renewable projects because they make good sense, and again, the capital is flowing to projects that have clarity and where return can be gained, and energy can be brought to, remote parts of the countries where right now there's not the infrastructure to get hydrocarbon energy to these places. Renewables is being invested in. There is wind and there is solar happening across Africa, but clearly what's dominating the conversation is what's happening either onshore or offshore in terms of bringing oil and gas and critical minerals, by the way, to the marketplace in a way that begins to enable the economic and development of the countries who are looking to attract that capital, try to, again, begin to create jobs and all the economic benefit that comes as infrastructure flows in and as energy becomes to be developed, and you start to build downstream facilities. So not just means by which you can deliver energy either internationally or to your domestic base, but what else do you do with those forms of energy to create fuels and feedstocks and other products that now you can begin to build downstream industries to basically supply the needs of 1 billion plus people who are projected to grow to 2 billion, sometime before 2050. So that's the conversation that's taking place in Africa. And I'll add, David, there is clearly a discussion that says we, the nations of Africa, have the right to pursue a hydrocarbon-based energy development program before we even begin to talk about decarbonization of assets. And I think the reality is at this time when Africa is starting to be at a pivot point, if they truly are at a pivot point, and that's the discussion that's underway out here. Is Africa truly at a pivot point? Well, capital will begin to flow and energy development will begin to take place at scale to where you can start to see a real rise in the economic development here, that they have the right to do that before they get on to, quote, decarbonization. But once they arrive at that point, if you think about AI and the current technology by which they would be entering these marketplaces, in other words, they're leapfrogging at an age of technology. It's not like it's 10 years ago or 20 years ago, coming back to the energy efficiencies. They're looking to bring in technology and to employ assets that are now highly efficient compared to what they were had they been doing this 10 to 20 years ago. So there's a benefit in that as well, as far as being late to the game, if you want to think about it that way.
As we're having this conversation, you bringing up critical minerals and India stepping forward and looking to become an exporter and the US moving into new forms like hydrogen takes me, as often does, back to Dan Jurgen and the new energy map. And I was just kind of wanted to ask the two of you, it feels like the way we think about the world and who's producing what and who's consuming what is really in the process of changing in a fundamental way. And I was wondering, how do you think about that and how do you try to keep track of all of it?
Well, I was just listening back to that show earlier this week, actually, David. It was September 2023 when you had our vice chairman of S&P Global on, Dan Jurgen, and he was talking about comments that were being made around the different schedules, the different timelines of the multiple energy transitions going on in the world. And if you fast forward to where we are today, recording this with you, well, that has certainly proven out to be true over 24 months of further development of policy in the climate space, economics, and investment. So the challenge really does become, how does one keep on top of it all? Because there is no one pathway, and none of these pathways are straight lines. They've got different motivations, they have different interplay going on. So I'm tempted to say AI is a great solution. Ask your favorite chat AI bot. We have a few at S&P. I'm sure others do as well. Other AIs are available. But genuinely speaking, it's important to go deep on a multipolar scenario where actually there are very different mechanisms in play and different models that are actually very well progressed by now that are going to have different outcomes. And it is a case of spending the time, however one chooses to do it, to do the research. Because just like when the modern energy industry was being founded in the 1890s, tomorrow's energy industry is being founded in the 2020s. And nobody knows what the ultimate outcome is going to look like in the big picture. But it's going to be probably one of the iterations being formulated right now in one of the countries we've been talking about, or maybe a different one. And we didn't talk about the European Union. That's worth a whole episode on its own, quite frankly.
Absolutely. I love that analogy of it's like going back to the 1800s and now we're forming the next leg of the energy industry. And of course, every one of those transitions leads to new giants in terms of the companies that dominate the scene. We've talked a lot about the countries, but Mark, I kind of wanted to turn to you and ask, how are you thinking about how companies are approaching these issues right now, the issues of energy and climate? And is there a common theme you're seeing amongst companies now?
I'm going to slant my comments towards, I'll call it the downstream industries of refining, well, I'll say refining ags and chemicals in terms of, because I want to relate it to the changes that you talked about that are now starting to occur, whether they be geopolitical or macroeconomic. And I think that the way companies are thinking about a lot of these commodity markets is, what is the role of China? And how will China's role either change or modify as we look to the next 20 years? And from my perspective, there was a real pivot point. If you think back to 2000 through 2020, the amount of investment that went into China, they talked about roads and infrastructure going to nowhere, but it was phenomenal. And the way they build up a downstream processing industry that ultimately was feeding the manufacturing floor for the world was mind-boggling by any lens that you wanted to look at it, both the capital that went in, the scale that they reached with these assets, the speed with which they built these industries was, again, nothing short of phenomenal. And it's gotten to a point where post-pandemic, where you have international trade relationships changing, and a lot of industries have to now pivot and say to themselves, a model of build low cost and export to high demand centers like China, maybe that takes on a little bit different profile in thinking as you go forward, especially as China becomes more self-sufficient in a lot of these materials. So all of these investments that were going in, starting with competitive energy and making downstream products, and China having this huge consumption sink, being a net importer, as they become more self-sufficient in certain chains, it's causing a pivot. It's causing me to rethink whether it was plastics or whether it was refined products. I'm having to have a little bit different view of what that's going to mean going forward. So now I have to couple that with, again, what's happening on the energy front in terms of being competitive. How do I need to make sure that I am managing my carbon profile? Because I would say most of the downstream processing companies are in fact looking to manage a carbon profile and trying to understand where am I going to invest and what technologies am I going to invest in order to make sure that I can develop ultimately a low carbon product, because I believe that low carbon products will become a market in and of themselves at some point in the future when that conversation becomes more at the forefront than maybe it has been with the recent pivots that have been going on. So I think the trade dynamics changing, I have to think about that. I have to look at where energy developments are happening. As Dave mentioned, where is India going in terms of possibly an exporter instead of a massive net importer? Same thing with China as they become more efficient. And then where is Africa going to play in all of this? If in fact the capital can flow and you can start to see developments at scale in Africa. So it really is a bit of a shift right now in terms of the world rebalancing itself in how you might think about from 2020, to 2040 versus 2020 looking backwards at 2000.
I love the way you put that, rebalancing itself, because I hear the phrase multipolar coming up more and more in conversations recently. And I just know, looking at what's happening in China, I feel like people who have the mindset of 10, 20 years ago really need to realize just how capable, how innovative, how commercially oriented the companies in China are right now. And I think a lot of folks in the US don't realize that. And I wanted to ask you, just how do you think that competitive landscape of companies in China, sounds like India is not far behind the rest of the world being a more competitive place with their own centers of innovation, their own large scale investments in productive capacity. How does a multipolar world that's rebalanced away from, say, US dominance look for companies?
Competition is always good. And the US made some of its strongest advances during the Cold War in the late 70s, early 80s, when it turned its energy industry through a whole 180 degrees around certain questions, when the administration then realized that A, there was a crisis in the Middle East around oil supplies, and B, the Cold War meant that it couldn't afford to fall far behind. And C, there were different models in development for how to accelerate. And from a company's perspective, how do we accelerate success? So, I mean, look, it wasn't just Cold War nations that were contesting the economy with non Cold War nations. There was also a contest between Japan and the United States at that time, right? Which some of us are old enough to remember. So, competition is a good thing. And I'm not suggesting that maybe that things fell behind over the more unipolar years of, let's call it 1998 to maybe 2008. Pick some dates that resonate, but don't make a ton of, maybe not a ton of sense to everybody. But there was a time there where the US didn't quite have the same competition that it has now. And I think that the US and US companies and companies that are engaged in trying to be profitable will go twice as fast and be three times more successful because of exactly what you're talking about. Many of the solutions coming out of China are hyper competitive. An electric vehicle from China costs one third or less of the price of an electric vehicle in the United States. That's a riddle. That's an opportunity for some entrepreneur somewhere to unravel.
That's great. Thanks for letting me throw some big questions at you. I wanted to thank you both for sharing your insights with us today. But before I go, I wanted to ask you both the same question, which is, how do you see the conversation and the action on energy, climate, and sustainability developing over the next few years? Maybe we could start with you, Mark.
Sure, happy to. As administrations in the US changed, one of the narratives that I started hearing is anything relative to climate, is it dead, right? Is it dead on arrival? And then you start traveling around and you start talking to companies, both in the United States, or you travel to the Middle East, you travel to Asia, Latin America, here I am in Africa. And the simple response is it's not. That these companies who are in these industries, while they're certainly going to take, and they have to take, a more pragmatic approach to what I'll say, quote, the policymakers were taking in terms of how fast we could reach certain goals when it came to carbon intensities and emissions in general, methane or carbon from that perspective. It hasn't died at these companies. They know that they have to advance along these lines. They know that they have to look at the projects, what that will most effectively and efficiently get them to a lower carbon future in terms of the products that they make. And again, I see that across the landscape. And yeah, you see people being cautious with the language they use or the words that they use, but you sit down and talk to them in their offices, this goal of trying to manage carbon, manage emissions, increase energy efficiency as well. I mean, all these things fit together under the sustainability umbrella. I got into the industry in 1985 with an operating company, and we were talking sustainability then, about leaving the environment as good or better then, and it's the same conversation that's happening today. So I, for one, am optimistic. The companies have not dropped the narrative. It's there, it's alive. They're savvy about the geopolitics of the time, but they're moving forward with their own plans and the investments that they have to do.
Yeah, and the way that I think of that, David, is that there will be a huge shift in the balance of questions and answers, as I think of it. So, in the past 5 years since the pandemic, the world has looked to the United States and the EU for answers on all of those questions that you outlined. And there was an expectation, really, that answers would come from the United States first, the EU second, and perhaps North Asia third. I think that in the coming 5 years, that's going to be turned very much on its head. And listening skills will become very important because the questions will be coming from North America, the European Union, and North Asia. And the answers are coming from some very surprising places, some of which we've talked about today.
Thanks again to Dave Ernsberger and Mark Eramo, co-presidents of S&P Global Commodity Insights and members of S&P Global's executive leadership team. We hope you enjoyed the episode. This concludes our series, Catching Up on Climate. We'll be back next week with a special podcast episode, Scenes from AIDA's North America Climate Summit 2025, a compilation of conversations from New York City Climate Week. We hope you'll join us.
This episode is presented by Base Carbon, a financier of projects involved primarily in the global voluntary carbon markets. Base Carbon endeavors to be the preferred carbon project partner in providing capital and management resources to carbon removal and abatement projects globally, and where appropriate, will utilize technologies within the evolving environmental industries to enhance efficiencies, commercial credibility, and trading transparency. For more information, visit basecarbon.com. Base Carbon, sensible carbon investing. That concludes this week's episode of Smarter Markets by Abax. For episode transcripts and additional episode information, including research, editorial, and video content, please visit smartermarkets.media. Please help more people discover the podcast by leaving a review on Apple Podcast, Spotify, YouTube, or your favorite podcast platform. Smarter Markets is presented for informational and entertainment purposes only. The information presented on Smarter Markets should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Smarter Markets are those of the participants and do not necessarily reflect those of the show's hosts or producer. Smarter Markets, its hosts, guests, employees, and producer, Abax Technologies, shall not be held liable for losses resulting from investment decisions based on informational viewpoints presented on Smarter Markets. Thank you for listening, and please join us again next week.